So the YouTube stream had a problem, but we are back now. We are back. Let me tell them to rejoin. Rejoin if you are in. All right, let's go back. So the reason why I advocate for US30 first is because US30 provides clean price action compared to other currencies, no, to other indices like US 100. So when you do the back testing for US30, back testing for US 100, back testing for US 500, you'll find that US30 has very clean price action. But the problem is you have to have capital to trade US30 or the indices, because their stop losses are quite huge. Okay, so you cannot trade US30 comfortably with $100. It is like trading gold unless you get sniper entries, and mind you, you will not be getting sniper entries on a day every day. You cannot get sniper entries on US30 daily. So that means sometimes your stop loss has to be quite wide. For example, you set a stop loss of 150 points, then you target maybe 500 or even 700 or even 1000 points. That's around a risk to reward of. For example, for those people who took this trade, a very clean trade, let me tell you, a very clean, sweet trade. I was even jealous of those people who took this trade. Very jealous of them. Very, very jealous. So for you not to get taken out, remember we are putting our stop loss below this line. And what is this line? This line is just denoting. So this line was denoting this this Monday low, and it also doubled as there was also another block here. So this was a very significant point for US30. You can see we had labeled it the low of the week. So if you are to take this trade, this US30 trade, you can see your stop loss is around 150 points, around 200 points. Imagine, these are 200 points, and let's say you got in around that place. So your stop, this is the realistic part of trading, by the way. The real part of trading. This is the real part of trading. So you are with us. So if you are with us, that is good. Good morning, Kate. So for some pairs, you have to just accept. You have to use a big stop loss so that you cannot have worries. Because sometimes the only thing which kills us when we get into a trade is that it is going to be hit by the stop loss very quickly, and we don't want that. We want to give price room to play around, then it gives us what we want. So for US30, when you get into the 4 hour, when you get in there at 430, your stop loss should be at least 200 pips or at least 150. So if you don't have some huge capital like maybe $1,000 or at least 500, my friend, you are doomed. Very, very doomed. So you risk 200, but when the trade goes your way, get this. That is why I'm telling you that is also a very good pair if you have the temerity or the balls for it. So it goes around. These are how many pips? So these are more than 1,200 pips or points. You don't even need 1,200 pips. You only need around just until it fills that gap. That's around 800. So your risk reward is to 1:4. So if you risk $1,000, you get $4,000 on that single trade. Imagine. And this is enough for, by the way, this is enough for the whole week and probably the whole month. If you are not, you don't like trading too much, because unfortunately trading too much also takes a lot of mental capital. So if you are able to get such a trade, it will give you profits for the whole week, the whole month. So the only thing right now we need as traders, because I'm very much considering starting to trade USD. The only thing I want right now, and I'm working towards this week, is setting something called as a timer. For example, so how a timer works is very easy on TradingView. So because maybe sometimes I may forget, because sometimes we forget because we have other obligations. But if you have a timer such that when price gets to this level, that timer sends a message to your phone that price has touched your level. Now it is time to go and get in. Now that is my work for this week. I want to know how to set that timer, and so that the message can appear on my phone like a message. Because most times when I set my timers, they appear on my email, and I am not on my email every day. So that brings an issue which I've not been able to solve for quite some time. But this week, that I have to put that to an end, because last week I lost how many pips? These are very many pips. There's no way I can analyze this market and fail to get these pips. Yet, if I was there, I would have taken that trade. If I had that timer, I would have taken that trade. Okay? But once we set that timer, it is very easy for us to get 2 or 3 good trades for USD. In fact, I've told you we only need 1. But if you get 3 trades, now you can relax for even 3 months. Only 3 trades. So out of maybe 5 in a whole month, you get 5 good trades. You lose 2 trades, because losing, you must lose. You must accept you lose. So you must prepare that psychologically. So in 1 month, you get good 5 good USD trades. You lose 2 trades, and then you win 3 trades. Okay, so you lose 200 pips. So let me tabulate this in a way that you understand. So you have 1 trade, 2 trades, 3 trades, 4 trades, 5 trades. So assuming you lose this one, and then this one, you get around 500 points or pips. And then on this one, you lose again. And then this one you get 800 points. And then in this one you also get 400 points. Or you get 200 points plus. So in total for the whole month, you'll have around, and your revenue, because this is now revenue minus profits. So your revenue is 200 plus 800 plus 500. So this one is equals to how many pips? These are 1500. Now that is your revenue. When you minus the expenses of those trades, so you minus 1500 minus 400 is equals to 1100, which are also they are too much. These are too much. So when we reduce this by 400, which is very easy to get because 400 is how many pips? And this is a phenomenon which occurs every month, every year. So 400 is up to that point. You just take 1 hour for that trade, which is very okay. Maybe you don't want to deal with the pullbacks. So that's around, even 500 are also very good. So each trade you get 500. So this is around 1100. Total this is 1100. So 1100 minus 400, that's around 700, which are still a lot. Okay, but you have to take the best setups for USD. So USD is like gold. You have to endeavor to take the best setups. So let us go back now to analyzing this technically. So last week our sweet spot level was hit. And how did we get to that sweet spot level? So that you can rewind a bit. To get to a sweet spot level, what you do is simple. You take a significant low, like this one here, a significant low and a significant high. Something very easy and straight to the point. Something which is not going to waste your time for nothing. Now when you take those two lows, and remember this is the higher time frame, the 4-hour time frame, and the day time frame. That's why we are getting our bias. You take these lows like these, and then you connect them with the highs. Now the point where we have between 70 and 61, now that is the sweet spot level. Sweet spot level. We call it a sweet spot level. It's a sweet spot level because that is where you start getting your sweet money. And we said entries are very important in trading as well as exits. You just don't get in because you know the bias, or you know the market is going to buy. Because if you would have gotten at this point, imagine if you would have gotten at this point. Let me delete this. The good thing about this market, you can talk about the market the whole day. So if you had gotten at this point, now this is psychological torture, which I hate. I don't like being in such a big drawdown. Okay? So this is almost how many hours of waiting? So from 9, let's say from 1 p.m. to 1 p.m. the next day, that is around 24 hours. So unless I'm a swing trader, I don't like being stuck in such a big loss. I want my trade, when I get in the next few minutes, it is giving me profits. I don't want to struggle for my profits because I have struggled to analyze the markets. Why should I struggle for my profits? So it is either the market is taking me out, or it is giving me profits, but not terrorizing my peace of mind. I don't like that. So the best thing is always to get the best possible entry levels. And for our USD, this was our best possible entry level, which became the low of the week, a very clean low of the week, a very clean one. If you can look at it, a very clean low of the week, a very clean one, a very clean low of the week. So what did price do? Price first came and created a simple low, and then it went on again. It induced more buyers before the next day it went down. So this movement is what I'm anticipating for GBPUSD also. By the way, 1 hour time frame. So that is the same kind of movement I'm expecting for GBP USD, unless it decides to start buying from this point, and at which point we shall get entries. But the best case scenario is for it to create some intermediate lows. So these are called intermediate lows. Those are the lows which are not very significant. These are called the intermediate lows. We also have intermediate highs. So this is the significant low we are waiting for. But these are intermediate lows. If you have huge capital, you can decide to get in at this level when price comes here. Okay? But if you don't have $1 million or maybe $100,000, you have to be as cunning as a fox. So let's go back to USD. I was just giving you now. Last week is done. Now we are in this week. For this week, I'll just use the same fib because we already have a confirmed buy. So we are already currently at the sweet spot level. I don't know that you can see that. So USD already it came and dipped in our sweet spot level between 70 and 61. And by the way, you will see me utilizing these tools daily. There is no any other magical tool I have. It is just these simple tools which I made here, and then I will continue. Someone else will continue using them when we are gone. So this is our sweet spot level, but price has already wicked inside our sweet spot level. But there's a problem. The problem is only one. Price wicked inside our sweet spot level during market open, not during the New York Stock Exchange open. And that is a problem. You may ask, is that a problem? Yes. A very big one. Yes, it is a problem. Well and good. If you had got this trade before the market open, like maybe you set a buy limit. Okay, that is why I'm telling you. This week will not end before I set. I understand how those timers work. Because if I had set a timer, for example, I set a timer. Okay, so an alert, not a timer. So when I add an alert, when you come to trading view, and you right click like that, and then you add alert. So you see, my problem is usually one. So setting alerts on trading view is quite easy. So you just come here. There's this clock icon. You press on that clock icon, and then you set your alert. Now the problem is, when I set this alert, I get my notification on the email. I don't know why. Oh, okay. So what happens is, okay. So the problem was me. So the issue is, it provides a push notification in the mobile app. So you need to have a TradingView mobile app on your phone to get those alerts fast. But I don't have that mobile app on my phone. So most times I get that alert on my email, or the alert comes in the on the page of the USD page, on the TradingView page, and yet I'm using a web page, a trading web page. So I think I will download I will download the mobile app. Then once I download the mobile app, I will start setting these alerts. the good thing about alerts is that once you set alerts, you don't need to be in the markets all the time. For example, we can set our alert on GBPUSD. Once our alert is triggered, we can go in, look for an entry, and then we go back. Okay, so the problem is I have to download the mobile app. So we set a date here. When should this expire? So this should expire on February 25. Trigger once. So we put once. It should trigger once. Then the value, because our value is 48,737. So 48, because these alerts will give you more money. They will add more money to your pocket, and you know you want to take advantage of the market as much as we can. So I have put, instead of putting a line, I've put value. When price gets to 48,737 or 48,700, no, 48,737, now the alert is set. So the only thing I need to do right now is to download my app and connect it to my email. So once price gets to this point, because it will come back here again, it will definitely come here again. So once it comes back to this point, I will comfortably buy now. So that is a simple lesson of how to set alerts. You see. So this dotted line shows my alert. So when price gets to 48,737, or I can even set. Yes, let me put it there. Yes, let me put it there. Yes, like that. So that whatever I have analyzed, I am able to take advantage of it. So even if I lose on GBPUSD, I'll still be winning on USD. So we have killed two birds with one stone here. The first bird is, where do we anticipate the US30 markets are going to go? For me, or based on our analysis, we have a lot of liquidity here. By the way, this is where, so we have a lot of liquidity here. So this is what we call liquidity here, or strong zones. Whether they are buying zones or whether they are selling zones, those are liquidity levels or liquidity areas. And you can see price came on Thursday, it failed to break this level, and we said breaking that level is closing above. So if price has not broken above, it means there is more room for it to get to 50,000. So we have to get to 50,000. We have to get to 50,000. And how many pips are these? So for indices, we don't use pips. We use what? Points. I don't know why we use points. I just met people using. I just when I was learning, we were told to use points, but I don't know why we use points and pips. Why we use points instead of pips? Yet the monetary value is the same. So these are around 1241 pips. So it is reading. I want you to read here. I want you to read here up. Here, I don't know whether you are seeing this. So it's reading 12009. So this 9 is what we call a pipette. It's what we call a pipette. But the real pips are 1200. So 1200 pips. So USD has the potential to go to 1200 pips just this month, just this week. Just this week. And we have set our timer. I have to set that reminder, by the way. Now let me write. Let me remind myself. Download trading view app after stream. So I have to pin that. So this week we have a potential of setting our low of the week around this level, and we shall be there. Once we set our low of the week, we have the potential of breaking these highs and proceeding to 50,000, possibly to 51,000. And the other good thing about USD is that if you get your first 400 pips, it's very easy to put a stop loss. It's called a trailing stop loss. It's very easy to utilize a trailing stop loss, such that you are able now to take advantage of the whole move, because you are assured that your trade is not going to end up in a loss. And prop firms will also not ask you. You can also check on gold. By the way, gold is the one which has annoyed me very much, because we did an analysis with you the other day. So sometimes some of the emotions I face is I have a lot of regret. A lot of regret, especially when I imagine we did this analysis with you, but because I had not set an alert. Imagine if I had set an alert on gold. How many pips are these? Mama. These are 5,000 pips. Imagine 5,500 pips. $5,541 pips. All right. So sometimes I have regret because this is a lot of money, by the way. A lot. Even using a 0.01, this is around 500 pips. If you use lot size 1, this is around $55,000. So if you are listening to this live session right now, the first thing is to download what? To download TradingView app on your phone. Okay, I never knew that, but so that now when we set alerts, because sometimes, most of the time, we shall not be taking trades on the live session. So when we set an alert on all the pairs, regardless of whether you are trading, so we are going to be trading GBPUSD, EURUSD, USD, and gold. But primarily, we'll be focusing on GBPUSD. The others, we shall be setting alerts, very clean alerts, the best alerts, setup alerts. So those alerts will help us add on to our revenue while focusing on this GBPUSD pair. Okay? Because sometimes, even though those pairs look correlated, all of them, let me tabulate them. GBPUSD, we have EURUSD, we have USD, we have gold. Technically, on a technical level, these four pairs are supposed to be moving in the same direction. Okay? So we could say they are correlated. The metal, the indices, and the currencies. We could say they are correlated, or they are supposed to be correlated. But do they move in the same direction all the time? No. No. Are they always volatile at the same time? No. Especially that issue of volatility. That issue of volatility, these four pairs are not usually volatile at the same time every time. So if we focus solely on GBPUSD, we shall be missing some EURUSD clean trades. And remember, the aim of these live sessions is to take a simple, straightforward trades. We don't want something which is going to start disturbing our heads for nothing. We want something when we, for example, look at this this gold trade. It hit this level immediately. It gave profits. So had we been there, we would have been swimming in around 5,500 pips. But remember, we are still in January. We have a whole year ahead. And these are the simple mistakes we are correcting, so that by the time we are getting to December, we will not be talking about 1,000 to no, I will not be talking about 100 to 1,000 pips. We'll be talking about 100 to 5,000 USD. It is very possible. You just have to open your mind. Open your mind to what is possible. Because once you cross 500 USD, from 100 USD, then from that point onwards, nothing is impossible. Nothing. Only your mind has those impossibilities. So download those apps. We shall start setting those alerts as soon as this week. We have already set one alert. Now the next alert we are going to set is for gold. So if you are careful enough, you'll find one thing. You'll see one thing. If you are careful enough, you'll see a simple pattern. And you know, this trading is all about pattern recognition. Okay? So gold does not operate like USD, which is very, very obedient of the fib. For gold, it respects what we call mitigation blocks. So once price breaks this level, this becomes a mitigation block. Now don't worry about these order blocks or mitigation blocks or whatever it is I'm talking about. From this week also, I'm planning to be dropping educational videos for you to understand this language much faster. Remember, we are still in January, although January is coming to an end. So let us say we are in February. So we are in February, we have 11 months, and by the time we get to December, we have perfected the art very well. Okay? So these are mitigation blocks. So gold respects mitigation blocks according to what we are seeing here. Although it never respected this level. So we are at 5,000, and when we are at this significant level of 5,000, gold might look as if it is overbought. And yes, it is overbought. According to me, it is very overbought. We need at least a retracement for us to go in. Now, there are two ways we shall do this. The first one, we shall use a fib, regardless of what you think about the fib. So we shall use the fib. So we shall mark this level. And why have we marked this? Why have we taken this level to this level? Because it is a significant low, and this is also a significant high. We cannot take this level because it is okay. We can. You never know. You will never know, by the way. So I've taken the two most significant lows. So this is a significant low, which was supposed to be our entry, by the way. So if price can get to this level, that is where now the what? The alerts come in. God damn. That is where the alerts come in. So this is a sweet spot level. This also is also a sweet spot level. And remember, it's also a mitigation area. Mitigation blocks area. Why is it called a mitigation block or a mitigation order block? Why do we call it a mitigation block? Simply for the simple reason that price has to mitigate. What is the meaning of mitigating, by the way? Because you know me, I just use words, I just use information which I was taught by. So to mitigate is to make something less severe. So I think the one who named it a mitigation block, he meant that we have felt very bad that price has left us, but now to mitigate our emotions, price has to come to these levels. But when you look at it technically, price will always go back to areas which it has broken before, like this OB. Hence the name mitigation block. So the first level is this level here. The second level is this sweet spot level here. So our work will just be waiting, then pouncing. So you wait, then you pounce mercilessly. So we would appreciate if price will get to this level or this level, because it has, in fact, by its virtue of buying, it never gave us an opportunity to get in. So Gold has to do something for us. It has to. We deserve it. We have waited. Okay? So unless we see a downward momentum, and if we see a downward momentum from where it is, as sure as hell, it is going to come to this level or this level. So we just have to keep our alert levels very high. So this is a very good sweet spot level for gold, a very sweet one. Now the other pair is Euro USD. You can see Euro USD when you put on your fib, so that you can see that the fib is one of the most accurate entry and exit tools we have out there. It is better than all the indicators combined. Let me tell you, all the indicators combined, it is better. Now when we take this low of the fiber or GBP USD, because GBP USD, no, Euro USD is also called fiber. When you take fiber, this low, which is a significant low, and this high, you come to this level where we have another sweet spot level. You can even go further and use this low. So price came and wicked inside this fair value gap, not a fair value gap, this sweet spot level, after which price has shot up to 23 pips. They might seem like small pips, but if you use a big lot size, it is almost the same as gold, because for gold and USD you use a smaller lot size, but for currencies we use a bigger lot size because our stop loss will be small. Basically the dollar level is the same. As long as you are risking maybe 1-2% or 3%, the dollar level should be the same in all pairs or even all metals. Alright? Alright. So where do we see this pair going? So the first is to highlight this significant high. So the highest high was on 26th December. So today we are just mostly doing analysis because we don't have news, and I don't like engaging when we don't have news. So price can come to this level, or how many pips are these? Very possible, very possible, by the way. If not that, price can decide to do what? To come to that level there now. That is using our fib. So these are potential low of the weeks. So this week we are just on Monday we are just trying to understand where do we want where are the areas where we are likely to witness the trend continuing. And I suspect ladies and gentlemen, I suspect that our turning point for a continuous buy will be during the FOMC on Wednesday. Okay? So I suspect that just give me 1 minute, please. Alright, so I suspect let us utilize the Forex Factory once again. So we have FOMC on Wednesday at 10 p.m. So right now we are just creating a map for the whole week. So we have FOMC on Wednesday. So you can see these 2 days are likely to be slow days. So during FOMC, because FOMC is usually very volatile and it's usually very fast, so if price can get to this level, well and good. If it also gets to this level, well and good. But because of FOMC's wicks, so FOMC produces very serious wicks, kind of wicks, like this one here. It is a very serious kind of wick. But not as serious as FOMC's wick. So if price can get to this level even using a wick, then we shall be on our way to buy. So it is important we set alerts for all those levels. So if you have a question, you can ask. But one thing I don't want you to forget is downloading that trading app, because we shall need it for the whole of this year. Because my trading style is mostly me waiting for the best prices to get in. And sometimes the best prices will not come at the hours we want, that is in 2 hours or in this session from 9 to 11. Sometimes our sweet spot levels are hit at hours we had not even anticipated. So should we miss those trades just because we are not in the markets? No. We need something like an alert to send us a message and tell us, check your charts now. The level you have been waiting for, price has gotten there. Because after from 11, I'm no longer in the markets. So if I have those alerts with me, I know once price gets there, I automatically get in. Good morning, Yakubu. So, does anyone have a question? Does anyone have a question? So, our general bias for this week is a buy. That is our general bias. But the other good thing now we have added, now the other advantage, because it is not good to depend on only one source of income. We have to have a lot of sources of income. We have to have GBPUSD, we have to have EURUSD, we have to have we have to have many side chicks, but we have one main chick, which is GBPUSD. That is the simplest I can explain it to you. So we have our main chick is GBPUSD, but our side chicks are US30, gold, and EURUSD. But for the side chicks, we shall only take the best pairs. We shall only trade the best trades. So then if we get like 5 good trades on each of those pairs, we are good to go for the whole month. Okay, so GBPUSD is for the learning purposes, but all the other pairs are also important, but we have to time them using that timer. So download that TradingView app timer and connect it with your web app, your web page app. So our web page app is what you can see on my screen right now. That is my web page app. But we have a TradingView app, which when connected will help now those messages to be coming live. So it is going to tell you price is crossing this level. Then you can get on your MT4 and then do the necessary. Okay? Now, on Friday, after price broke this level, my analysis was that I wanted price to get to this level, to a sweet spot level. Why? Yes, we could have used this mitigation block style, where we just wait for price to take out significant highs and then get in. But being on a Friday, I like being cautious on Fridays. Unfortunately, even with my cautionality, even with my cautiousness, price went a whooping 157 pips. So sad. So sad. 150 pips. But regardless, when I started the stream, I said one thing. The best pips are the pips you have not yet made. And even if we make 200 pips, the next week we shall still have 300 pips waiting for us. The next week, for example, this week we have planned, we shall be taking advantage of 4 pairs. That's a very good thing. So that is the only way we can plan ourselves for February. and the end of week of end of month of January. So if you have a question, you can ask me, because right now I'm not getting in 20 trades. It's a Monday morning, it's very early, so we need to measure our steps. We need to go slow. So how do you develop your psychology? You have to be exposed in these markets for a long time. The way now you're exposing yourself is how you should be exposed to these markets over a period of not less than a year. The more you expose yourself, the more your experience increases. The more your experience increases, the more your fear goes away. The more your fear goes away, the more your confidence increases. So it's a give and take. You give time to the markets, then you take profits from the market. And not just spending time with the markets. You have to learn what the market does over time, what each pair does over time. Okay? For example, you have heard me telling you gold does not necessarily respect Fibonacci the way USD respects Fibonacci. So as we end the live stream, you can check whether there is anything reliable. So CFTC. On the CFTC data. So we begin with Euro. What? So Euro, the hedge funds are long on the Euro. They have 993 positions on shorts and 8,000 positions on longs. But for the GBP, I'm not sure why we have more shorts than longs, yet GBP USD is buying like no man's business. But as we have said, we shall keep close watch on those four pairs, and whenever we have a good entry, we shall just take the entry. So today being on a Monday, and being that there is no news, and being that now we are just beginning the week, our work was just to set traps, understand how we shall set those traps, and then prepare ourselves for that, for the long week. It's going to be a very good week. In fact, I am very sure that as soon as, what I know is that from today, a lot of people are going to lose their money. Why? Because those conditions, for example, you can see now GBPUSD wants to start selling. So in the process of getting to this level, a lot of people will lose their money because they'll be trying to buy. Remember, I have told you I want it to go like this, then like this, then like this. So it must create these small intermediate lows to induce buyers to buy early before it comes and makes a low at this level. And this low coincides with this fair value gap, and this fair value gap coincides with this mitigation block, and this mitigation block coincides with this high of the year, which has been broken. So it's going to be a great week, and I hope you are ready for it. The only thing you can do is, when you make money, that the trading cyborg, gets some rebates from your trades. Remember, this is a long-term journey. It is not just this month. We have a whole year ahead of us. So if you're going to make some profits, I deserve to get some rebates, because the more we proceed from 100 to 200 to 300, $400, $500, $600, the more the lot size grows. And the more the lot size grows, the more my commission grows. So that is also a plan I have for this year, to eat some commission on the growth of your account, at least. So if you have not deposited some money in the broker, please do so. The link is on the bio, but if that broker is not in your country, then don't worry too much. If they are not accepted in your country, then you just have to find another way of appreciating me. Okay? But if he is allowed in your country, do what has to be done, and let the man eat some. Give Caesar what belongs to Caesar. Give the cyborg what belongs to the cyborg immediately. Okay? So if you have no any other questions, I'll give you some 5 minutes, then we can break. We can come tomorrow. But don't forget, download that app right now. Right now, download the trading app and connect it with your web app. So when you sign up on your web app, sign in again with your mobile app. That way it is connected, such that when you put on alerts, you'll be receiving those alerts like a message. There's nothing as sweet as like that. That is a better message than I love you. Receiving trading view alerts is a better message than I love, because now that trading view alert, that is a money alert. A money alert. So thank you once again for your time. I will not encourage you to take any trades today, because we still have Wednesday, Thursday and Friday. That is when the real move should be starting. So for now, just observe the markets. Paper trade if you want. That is, use a small demo. Use a small lot size, maybe 0.01, 0.02, until we get to Wednesday. Now when we can now pull out the real guns. So thank you for your time. I hope this lesson was worth it for you. I hope this time you have gained something from this live session. So let us meet tomorrow, same time, same place, same energy.